What's going on, guys, and welcome back to another video. So with the end of the week approaching, and also because of the Easter holiday break when the markets being closed, I thought today would be a fitting time to do a trading 2-on-2 portfolio update. So how I'm going to structure this video is, firstly we'll have a look through my overall trading 2-on-2 portfolio to see how it's performing. Then we're going to discuss some topics that I was on about last week in the form of dollar cost averaging, taking profits, and also the second broker I'm using. So I'll give updates on all three of those as well. And finally, we'll discuss my trading plan next week and my plans on investing further capital. And with all that being said, let's dive right into today's video. So here we are on my trading 2-on-2 portfolio. I'm quite happy with how it's performing at the moment. Now, if you're new around here, my overall goal on this channel is to get €100,000 invested into the market. So we're about 8.6 of the way there at the moment. We can see here as well on screen, we currently have about €8,400 invested, or up €1,209 or 16.8%. And we also have a further €200 in free funds that we're going to invest over the next few days as well. Just to give you some comparison, if you don't use euro yourself, €8,600 equates, if I just check my phone, about 10,117 USD, or about 7,320 GBP. Let's look firstly through my portfolio pies to see how each is performing. At the moment, communication services, we have €636 invested, are up 33.3%, and we have two holdings here in the form of Walt Disney, which is up 50%, and Facebook, which is up 18.8%. Then have over €1,300 invested in consumer discretionary, are up 3.7% at the moment. Three holdings here. Firstly, Tesla is in the red, one of the few companies, thankfully at the moment, that's in the red. But again, that poses great opportunity dollar cost average, which we will discuss later on. Now, Tesla, as you probably are well aware, was down about 20% about 2 or 3 weeks ago. So for it now to be down just 4%, we're actually doing quite well at the moment. Then we have McDonald's up 9.3% and Nike is up 0.8%. Consumer staples is another pie that has broken the 1,000 mark. We currently have €1,276 and are up over 8%. We have three holdings here. Coca-Cola up 10.5%, PepsiCo up 9.8%, and P&G is up 5%. And I have my energy sector pie, which is €530 or so at the moment, up 16.9%. The three stocks/ETFs. Firstly, iShares Global Clean Energy ETF. Now this was down about 15 to 18% a few weeks back as well. And a lot of people asked me if I was going to panic sell or to get out of the ETF completely. But obviously it just goes to show that patience and consistency is key in investing long term. Now it's down about 4.5%, which is certainly a hell of a lot better than down 18 or 20% a few weeks back. And that's mainly due to dollar cost averaging and also because of Plug Power, the whole news or the negative news around their top holding within this ETF slowly starting to kind of come back to normality and the hype starting to die down. So I'm very happy with how that's performing. And again, we'll mention later on, this will be one of the stocks or ETFs that I will dollar cost average into further yet again to get it back into the green. We then have ExxonMobil up over 70%, so that's definitely one of my top movers at the moment. And then Chevron is up 47.8%. We then have the two ETFs that are doing fairly well, up about 20% overall between the two. We have just under €800 invested. The S&P 500 is up 21% and the FTSE 100 is up 16.3%. So again, there's not a whole lot to kind of update here at the moment, but they're doing pretty well at the moment. Financial sector pie is probably one of my best performing at the moment. We have €1,160 invested and are up nearly 35%. So that's fairly good for financial sector kind of blue chip companies. Usually they only go up a few percent here and there. So I think we were lucky enough when we actually got in terms of timing. So we have Visa up 11.3% and MasterCard up 14.3%. Two of those were in the red about a month or two ago. But again, dollar cost averaging made a big difference in getting these back into the green. JP Morgan is up over 60%, Bank of America 65.5%, and finally Goldman Sachs is up over 67%. So definitely overall, this is probably my best performing pie at the moment. We then have the healthcare sector up about 13% or so at the moment and just under €900 invested. Three holdings here, Johnson & Johnson up 13.5%, AbbVie up nearly 28%, and Pfizer is up 4.6%. Now again, I mentioned before, I don't really have a whole lot of interest in the healthcare sector at the moment. I don't really find any value really in these stocks. But again, we got in at good time, so I'm going to leave them as is for now. Industrials, we have €285 invested and are up 22.8%. I'm quite happy with how that's went, and the reason we don't have a lot more capital invested within the sector is because really the day or two after we bought these three stocks, they went up in value fairly fast, so we didn't never got really a good chance to dollar cost average. So I suppose that's not a bad thing either. So 3M is up 19%, Caterpillar is up 52.3. Now that's one I wasn't expecting at all, so that's good news I suppose. And Waste Management is up 17.5%. My smallest pie at the moment is the penny stock pie. We only have one holding in the form of High Tide. Now I've made a lot of in-depth videos on this stock at the moment, so I'll link them in the description below. They're currently up 4%, which probably isn't the best return for a penny stock, but it's green nonetheless. We then have my real estate pie, €66 invested here. Only the one stock in the form of realty income, and we're up 13%. So it's kind of annoying that well, I suppose it's a good thing to have, I suppose, but it's doing so well at the moment, so I don't really want to invest any further capital into the likes of realty income either, because obviously it's doing well, so I can't dollar cost average. So that's the reason we only have €66 here at the moment. We still don't have anything in the utilities and material sectors at the moment. So I know a lot of people did suggest stocks for those sectors in the comments in prior videos, so thanks very much, and I'm currently looking into those as well. And then we have my technology pie with €1,364 invested, or up 20.3% overall, and all 5 holdings are doing fairly well. Microsoft is up 18.6%, Amazon is up 4.5%, we then have Apple up 12.6%, Alpha Class A is up nearly 50%, and IBM is currently up 14.7%. Now the second part of this video is we'll give a brief update on the 3 things that I mentioned in a prior video in the form of dollar cost averaging, taking profits, and choosing a second broker. So I'll just give 3 brief updates on those. Firstly, we'll discuss with the broker. Now I thought about this, and what I'm going to do is I'm going to wait until I get €10,000 invested into Trading 212. So if you might be aware, if you're not within the UK, you're only protected up to €20,000 on Trading 212. So once I get to the 10,000 mark here, we're about €1,400 off at the moment. But again, we should probably get there in the next month or month and a half. And once we have that invested and the €10,000 invested fully within this portfolio, we'll then start shifting over to the DEGIRO as well. Now I just want to mention as well that we will continue to put money into Trading 212 as well. But certainly once we hit the 10,000 mark here, I do want to start putting funds into the DEGIRO. So that's the update with the second broker. The second part is dollar cost averaging. Now, as you're aware, you probably saw when we looked through the portfolio pies there, that currently 29 of the 31 stocks/ETFs are in the green, and fairly well in the green as well. Again, you can't really complain about that, but that does pose little opportunity to dollar cost average at the moment. Now, the 2 stocks/ETFs that we can still dollar cost average into are Tesla and the iShares Global Clean Energy ETF. So I will certainly, they're both down about 4% at the moment. So I will be putting funds into those 2 stocks/ETFs next week as well. Now I won't be investing on Tuesday because the markets are closed until then. So usually there's kind of a bit of a pump into the markets after a long weekend. So I will be waiting to at least Wednesday, maybe even Thursday, before further dollar cost average into those 2. So as you can see on screen as well, we have €200 of free funds. Now I'm not going to put the whole 200 into those 2 stocks/ETFs straight away. I'll probably put, let's say, €50 into each on next Wednesday or Thursday, and leave the other €100 free cash to see how other stocks, and even those 2 as well, react in the coming days as well. If they go up in value, well and good, but if they drop in value, we still will have another €100 in cash to take advantage of lower costs. Now the third update on taking profits, I'm still undecided on, if I'm being honest. I'm kind of on the fence. We're currently up about €1,213 or so. So one part of me does want to lock in those profits and start cutting down some of the best performers. For example, let's say Chevron is up 70% at the moment. A lot of the financials are doing pretty well as well. So I do want to, again, because I gave updates on the other 2 parts of this video, the third one, taking profits, I do want to spend a little more time on. I might leave as is realistically until we hit the 10,000 mark on this portfolio, and then kind of reconsider where the portfolio is at. Now at the moment, a lot of stocks and the overall market is probably in a bit of a bull market, and to be honest, it probably is overvalued in a lot of cases. So that's what I'm concerned with as well, and that's why I would definitely advise, even for myself and everyone else, that you should always hold a cash reserve, because this will make a big difference when the markets do and will inevitably crash in the next, let's say, 6 to 12 months. It has to, like, it's a given, like markets are cyclical, so they have to kind of react, go up and down in value at any given time. So that's my kind of plan as well in terms of taking profits. I'm still undecided, if I'm being honest, but certainly one thing I am doing is building up a cash reserve on the side. So that's pretty much it for today's video. I just wanted to give a brief update on how my overall portfolio is performing, and I gave brief updates on dollar cost averaging, taking profits, and my investing plans going forward. If you found this video anyway helpful or interesting, it'd be much appreciated as always if you're new around here, if you consider subscribing to the channel. And as always, if you could smash that like button, it would be much appreciated and it would really help the channel out. Finally, most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your long weekend, and I will see y'all in tomorrow's video.